All right, so welcome back to our weekly education webinar. So I'm going to kind of kill two birds with one stone here. I'm going to do my trade recap, but I'm going to kind of take you through the process of how I recap and journal my trades, and we're going to use the trades from today. I do have one good trade and one trade that I kind of pushed the issue on, and another trade that just didn't work. But we're going to go through the process and really show you how doing a journal or writing a journal can help, because it is key to be able to journal. There's just no shortcut to that. So hopefully most of you guys actually use a journal right now, because that's really a good way to do it. Now, one thing I'm going to have to change is, how I I track my numbers, because I don't know if I'm going to continue to use Profitly, because I really don't want to give my account access to a third party. I was advised not to do that, because that can cause some issues. So trying to figure out how or what's the best way to do it, so I don't have to sit here and come up with all of these numbers in my head. But what we're going to go through today is my process for journaling and why I feel we need a journal. So here's a Venn diagram. If you're in education, you know exactly what I'm talking about. Kids either like it or love these things. But it was interesting that I was able to find this. And this kind of helps you understand what the role of a journal is. Okay, you're going to have your trading strategy, which you should have outlined in your trade plan, your overall trade plan, which is like similar to your business plan. Okay, so you're going to have, your rules for entry, exit based on your strategy, the stop placement, how you're going to take profit, how you figure your position size, manage your risk, how you manage your trades. So all of this is going to be established in your actual trading plan, which is like a business plan. And by the time we're finished with this quarter, by the time the fourth quarter is finished, everybody that's following along should have a viable trading plan, because we're going to go through all of the steps. We're going to go through all of the pieces that you're going to need to put it together. Now, I'm going through it in a way that makes sense to me, based on how I feel I should present it. So at the end, we're going to put it all together, and you're going to have your trade plan, and it should be ironclad, and you should be able to edit it and update it as you see fit, as you grow, as you develop as a trader. So the first part of the journal is going to have your strategies and the rules and everything that you follow for that particular strategy. So you always have that, right at your fingertips. Now, the other part is going to be, tracking your trade data, analyzing it, talking about your experience. You're gonna have your numbers in there, your efficiency numbers. You're gonna talk about just about everything and anything about the trade, and that's what we're gonna go over today. We're gonna go through the reflection part that I put in the journal. Last week we went over how I plan a trade and how I write it out, and that ends up becoming part of my journal. So we're going through the pieces, and in the end we're going to put it all together. So here in the middle, where these overlap, this is going to let us know exactly why we need a journal and what the journal does for us. It helps us find weak spots in our trading. It helps us adjust our strategy as the market changes. It helps you, it keeps you from exposing yourself to the market more than you should. Helps you manage your finances or manage your buying power. It helps make you aware of the mistakes that you're making constantly. If you're making the same mistake over and over and over again, you'll be able to see it, in your journal. It's going to help you trade better. It's going to help you pick better entries and exits. And it's going to help you really keep everything together so that you're not using so much of this mental energy to figure out what's going on. It's all going to be there, right there in the palm of your hands. So every night when you journal or you write down what you did in your trades, how well you did, whatever you're going to put in that journal, all of this is designed to help you get better. So as you come into the world of trading, you're going to be trading alongside the best and the brightest minds that this world has to offer. And they've got years and years of experience over you. And let's see, the number one tool that can really help you legitimately speed up, because everybody's trying to get there fast, that can legitimately help you speed up your learning curve, is going to be implementing and actually using the trading journal and using it the right way. Whether you do it by hand, whether you type it on the computer, whether you do the video or just record the audio from yourself, there's no right or wrong way to do it. You just need to do it. For me, handwriting it makes more sense because based on my learning disability or dyslexia, I have to write it down. And writing it registers it in my mind. It slows it down enough to where it's not going too fast and I could process it a lot better. Because, I don't know, one of the parts of dyslexia, what I would do is I would read and I would be reading faster than what my mind was comprehending. I could read faster than anybody, but I couldn't comprehend the thing. So I've got to do things to slow it down going inside so that it sticks. And it works. Once you identify it, everybody learns differently. Everybody has different ways of retaining information. And for me, it's going to be writing. So it doesn't matter how you do it. What matters is that you do it. There's no shortcut to good journaling, because that is what's going to help you continue to get better. Like I said, either yesterday or the day before, think of you. Let's say you decide one day you want to play basketball, and you come in and you're like, hey, I want to join this league and play basketball. And the first game you play on a team with professionals, and you play against a team with professional NBA players. You know, how out of water are you going to be in that environment? You're playing against people that's been playing for years and years, that are at the peak of their game. They're the top 1% of everybody that's played that game in the world. So how do you think you're going to fare against them? And it's the same way with trading. You know, we don't have a process that we're forced to go through. All we need is some money, open a brokerage account, and we can trade whatever we want to until we run out of money. You know, and you don't have to go to school. You don't have to learn anything. And that's what the big problem is. So you have to take responsibility for yourself and make sure that you hold yourself accountable. Let's see, Juan, what he said. The real thing in the journal is to really reflection on what you did that day. Because you use a journal now, and he sits down and goes over every day and restudies every single thing. Exactly. And that's exactly what we're going to be doing today. Exactly. And you have to be honest with yourself. That's another key. You know, you have to give an honest assessment of what you did. If you messed up, then you need to write down you messed up. You have to own up to it. You know, that's one thing that I try to do every day in chat, is if I make a mistake, I own up to it. And I tell you, okay, this is what I did wrong, and this is what I should have done. And, you know, I need to focus on this. Because nobody is perfect. Everybody's going to make mistakes. Everybody's going to take a little chance here and there. And having a journal and, you know, is going to help you get to the next level a little bit faster. It's not a shortcut. It just helps you bridge that learning gap, bridge that learning curve. So, you know, part of my trading process, this is an excerpt from, you know, my trading process. You know, once the trade is done, I'm going to reflect on how well my plan worked and how well I stuck to what I had written. You know, most of the reflection on my trades, they come in the evening when I review and recap my trades from the day. And, you know, one of the key things I believe is that we forget is reflection. And it's good, you know, Juan brought that up. He might have been listening from before, because, I mean, I've shared this, you know, forever, ever since I had a voice, you know, in this trading industry. You know, I've shared, this is one of the things that I brought from teaching, from education, I brought from engineering. This is what we do. You know, this is how we get better. And, you know, I asked myself, what did I do right? What did I do wrong? You know, should I have sold earlier? These are all things you have to ask yourself and go through each trade. There's no shortcut to doing this. And this is a key component in my journal. Okay, the first component was the trade plan. Okay, each trade has to have a plan. And that plan goes in the journal. Okay, and after that trade plan comes my reflection. And I shared this reflection model with you. This is the model that I use. This comes directly from the model that some of us use in education. And it works It works wonders. Now, yeah, some of these you can add together, however you want to. But the key is to answer all of these questions in your reflection. And like I said, for me, I like to write it. And so we're going to go through this description real quick. And then, we'll start looking at my trades from today. So the first thing, I'm going to write down is I'm going to describe the results of the trade. I'm going to give a detailed description of what the results were. Then I'm going to talk about what were my feelings during the trade. What did I like that was happening? What didn't I like that was happening? Do I feel good about the results? Okay, and these are short questions. You don't have to write a book. These are just short answers that you're putting down, and it's making you think about and reflect back on that trade. Evaluation. Was it actually what was actually good or bad about the trade? Was your entry good? Was your exit good? Did you manage the trade the way you should have? You're giving yourself a good evaluation of what happened in that trade. Then you're going to analyze. Does the trade make sense now that you've looked at it and you've analyzed it? You looked at your entry, your exit. Does the trade really make sense to you? And then what's the final judgment on the trade? All you're going to do is say, it was a good trade. I don't think I could have done anything better. Or this was a bad trade. I bombed the entry. What I should have done is waited. And your conclusion and action plan a lot of times can be put together. You can add both of these together, because what you're going to do is write, how are you going to avoid the mistakes? Or how are you going to make sure you get the same results the next time? And just by answering these questions and filling out, the form, it's going to help you. And these are important because they show how I prepared for the trade and then how I focused on the trade. Okay, it gives me a tool to go back and reflect on my trades. And if you focus on the right process in reflecting and you do it the right way, you can design your way, to trading success. It helps deal with your emotions. It helps you become a whole lot better and more consistent trader. Now, I've got this that I could email to you if you want it. All you gotta do is just send me an email and I can email you. It's a Word document, but this is what I have. Actually, this is actually the old form. This is the one that the top got chopped off of. Let me see if I can find the right one here. And I'll show you what it looks like. Gotta go to Microsoft Word. So I'm going to show you the full document. All right, so here's a yes, I want to automatically share changes. All right, so here's the document that I use. Okay, when I get ready to sit down and reflect on my trade, I'm gonna have a copy of the chart. I'm gonna take a snapshot of the chart before I shut my platform down. I'm gonna add the entry and exits, and I'm gonna add the profit and loss to it. So I'll show you an example of that here in a second. But I do write on here, I write the ticker. So we'll keep flipping back and forth here. Okay, so let's say this morning it was AKAM. That's the ticker that we used. That I traded. I entered at 935.48 at 55.75. Okay, my position size was 200 shares. My hard stop was 56.25. That was my hard stop. My technical stop was a close above VWAP. That was my technical stop. Now, I could have used the 5-minute opening range. I could have used, anything pretty much. So let's flip to the next screen. Let's take a look at the trade here. All right, so the strategy was opening range breakdown. Okay, that was the strategy. Now, obviously, I anticipated this. That the strategy that I wrote up was an opening range breakdown. So that would be what I would write. Excuse me. That would be what I would write. Up here I would write what strategy it was. Okay, what was the result of the trade? Okay, the result was I stopped out. I was stopped out by my max loss stop, or I could say it hit my max loss stop and took me out of the trade. However you want to write that. It's just as simple as that. You're writing what the result was. Okay, so what were your feelings during the trade? So let's go back, and I was feeling good for about 60 seconds because I got in. I felt we were rejecting up here. I got in. It felt good. Felt like it was working. Then all of a sudden, it gets bought back up. This candle opens, and we started to sell off again. So I'm feeling okay. But I don't really like the choppiness of the price action. Okay, so what I was feeling good initially, but then the price action caused me a little bit of concern. So that's what I was feeling. I was concerned about the price action. I think I mentioned it, in chat what I was concerned about while we were taking this trade. It just started. This is choppy. This is what we call choppy. A lot of times it'll put in a candle like this initially, and then the price action would settle in. This never did settle in until after about 15 minutes. And it settled in. So now I've got, how I felt during the trade. So just that quick, I've gone through the first two. Okay, so the evaluation. I got to be honest with myself. What was good or bad about the trade? I can't see any. The good, really the only good about this trade is that I stuck to my stop. And, you know, I got out. That's the only good thing about it. What was bad, I see, is that I anticipated the entry. I rushed it. There is a strategy that you can take this off the rejection of, you know, the moving averages up here, or the VWAP. But that wasn't the strategy that I was supposed to be trading. So this was a mistake I made. I was supposed to be trading a 5-minute open range low. So I shouldn't have taken this trade until here. Now, would it have still stopped me out? Absolutely. Still would have stopped me out. But that would have been a plus. I would have waited for the setup. And this would have gone down as a fail for the one of me taking it on the breaking of the low versus waiting for the close below it and then getting in. Either way, this would have been a doomed trade from the start. So this wouldn't have worked either way. I took it here on the break. It doesn't work. It stops me out. I try to wait for the first candle to close. It runs all the way down here. It's too close to the 200 from the daily at this point. So there's nothing here. And you know, these are the things that we look at. So this is registering in my mind as, okay, if I'm going to take a trade like this, I need to take it off the rejection up here so that I would have still been in this trade and let it work. So I kind of got caught in the middle of taking it off the rejection and getting a 5-minute opening range low. This was a classic case of me not following the trade plan I had in front of my face. It's me negating what I had written down and decided that I was going to jump in because it looked like it rejected in its washing, even though that wasn't what I was looking for. Okay, so my first profit target was going to be 55. Second profit target was going to be 54.65. And then my last profit target was going to be, I was going to try to catch the 200 here. So those were my 3 profit targets. I forgot to tell you that earlier. So let's go back to the journal here. So those are my profit targets I had. So my exit 1, I would have written down 55. No, what was it? 56.25. That would have been my exit 1. And then my profit loss was $100.87. So I had a max loss of 100 on that trade. That's what I intended to have, and I stuck to it, and it had a max loss of 175. Now, I did raise it because based on the way the market has been going, I needed to give it more room, and I felt I was suffocating myself trying to stick with 50 right now. Yesterday, 50 would have worked good. Today, 50 wouldn't have worked. Even 100 didn't work. So that's, you know, all that would be filled out up here. I should have done this. We should have gone over this. This is written down before I get into this. Okay, so I just talked myself through everything that was good and bad about the trade. You know, everything that I did that I did wrong. I'm just listing the things out that I did wrong. Okay, now, does the trade make sense to you now that it's over? So as I look at this trade and I take it, did it make sense what I did? Absolutely not. It made no sense because this is no strategy. This is, I really don't know what the hell I'm doing. I'm just going to get in this trade anyway because I want to see it go down, and it seems to be going down. And you see where my risk was, right on the 20. You never want to put your stop, your hard stop, directly on a moving average, because what happens is just what happens here. It can come up, it's going to test, and it's going to go past at least 5 or 10 cents, and then it may start working. So if you have to put your stop near it, you want to make sure you give it enough room. So even if I gave it 10 cents, it would have stopped me out, but at least it wouldn't have been sitting on there. So these are just things that I see wrong, and which tells me this trade, it didn't make sense. The plan made sense, but the trade didn't. My execution didn't. Yeah, I write this down. I physically write what I'm thinking. No, I don't type it. I don't even have an Excel spreadsheet because I was downloading everything into Profitly, and that was keeping up with my numbers. So that's something that I'm, trying to figure out where I'm going to go from here. So here's the thing right here. 187. So that's what we ended up with. And you can see red on the day. But I'm getting ahead of myself. AKAM, this is, what the final results were on it. Now, and a couple things I want to talk about as this was happening. Usually, when something like this happens, the first trade of the day, and you're watching every other stock you had on watch, like WBA, make this move. IRBT make this move. TRVG make this move. And you're sitting in here in a stock that you picked out of those 4 to trade because you felt it had the best opportunity to get to the marks that you had set. And you see that brings in a lot of emotion that if you're not prepared to deal with, can destroy you. I could easily have ended up hitting my max loss today, been down $300 and out of the game if I had let this get into my head. So one of the reasons that I cannot let this get in my head too much is because I know I'm going to look at this and I'm going to study this tonight, and I'm going to make sure that I don't do this again. That there's got to be a reason. There has to be something that I missed that would cause me to pick this stock over the others. Is there something in this trade that would have told me this wasn't going to work? And from what we looked at, no. There's nothing in this stock that I would have seen this morning that would have told me I couldn't get the same move as this or this or this. Nothing. So in the end, that helps you feel a little bit better about it. And you know during the day, it's like, okay, this is a loss. Let me file it away. Let me get my head back in the game. Let's get ready to tackle the next trade. And we'll figure this out tonight. And we'll figure out, is there something I'm missing? Did I skip something? Did I miss a step? What about this stock, should have kept me out of it? And all of this is what comes up when you're starting to go through your journal here. Okay, so I said, no, the trade doesn't make sense to me now that it's over because I did not trade a viable setup. The bottom line, that's what it was. So the final judgment of the trade, I didn't follow my trade plan that I had written and put together before the open. I didn't do that. I didn't trade a viable strategy. I was, could it be the fear of missing out? Not really, because I didn't feel I was missing out. Probably greed because I wanted to get in early and get as much profit as I could. Could have been greed, because that's what got me in when I got in. But overall, we go to the final judgment of the trade. Overall, it was just a bad trade all the way around. What I'm going to have to do next is follow my trade plan. I have it right in front of me. I have it written in front of me. There's no reason for me not to follow it. And the way it's supposed to work is if it sets up and triggers, you enter the trade. If it doesn't, you don't take it. It's just that simple. It sounds simple, doesn't it? But it is not that simple to follow. That's why the mind game, the part that helps you execute your trades, is very, very important. I let myself get ahead of myself, and it was probably because I had an awesome day yesterday. And I finally felt the market coming around, and I felt I could be a little bit more aggressive. And now, Flavio, I don't really write down the trades that I didn't do, but I do print the charts just like I did here today. I do print those charts and of the stocks that were on my watch list so that I can go back and look at those and find and try to figure out, is there something on these stocks that would have triggered me to pick this one over that one? So those are the only ones that I do. Let's see. If you do the reflection the right way, even though you make money, you will say that it was a bad trade. You broke your rules and it didn't work. And that was perfect example was STX yesterday. Perfect example. I ended up not digging a hole for myself, but I broke my rules initially. So it really, in the end, it worked out. In the end, I managed it based on what I learned. But for me, it was not a good trade because in the beginning, I broke my rules and I wasn't supposed to be doing what I was doing to start with. So, definitely, that's why being honest with yourself is key. That's why I say you have to be honest with yourself. If you broke every rule in the book and you made $300, still a bad trade. If you lost and you made money, if you lost and you stuck to your plan then that's a good trade. It's a good trade, and you didn't make money, but you managed it perfectly. And so the next one, the next trade, we're going to see just that. We're going to go through, what was my next trade? All right. Well, no, I forgot about GSK. This was the decent trade today. Now, this took some patience. It took a whole lot of patience. But in the end, I did make a mistake. So let's go through this real quick one more time. All right, so I'm gonna fill out all of this. It's going to be, GSK. My entry time was 10:01, 38.78. Then my first exit was 38.33, then 38.10, and then 38.15 for the final one. Position size was $300. My hard stop was 30 cents, I believe. 33. Yeah, 30 cents. My technical stop on this one was the 9 moving average. A close above the 9 would have taken me out, because this was a trend continuation based off the 9, and then here 164.79. So I fill out that, and now I'm starting to look what was the result of the trade. This was a profitable trade. I was able to scale out 3 times. The second time was a profit stop, but the second time was the final stop, or the final position was manually taken off by me. So what were my feelings during the trade? This is taking too freaking long. After we saw this, the big move here, and we came up and we were rejecting the VWAP, I was expecting this to continue to roll over. Now the 9 was close enough to where I would use the 9 versus the VWAP, which is why I said the 9 moving average. And so I expected this to come back and immediately test this 38.50 level. I immediately expected it to do that. And if it was going to bounce here, if it looked like it was slowing down like it did here, I definitely would have taken half off. But it never did make it. It came back and it retested the VWAP here. And then finally we got the rollover. And, I was kind of holding to see if we were going to dip lower, because I think I had an order at 25 at one point. But then I went ahead and took it off. I'm glad I had better sense. Took this off and then waited. This thing traded sideways forever. My next target was this 38.14 pivot, which was good. I hit that pivot. Well, and here was my mistake. My final target was this level here, 37.80. This was my final target. This hit at lunch. It was when it got here, and I was like, oh, well, this thing is just going to go sideways for a while. I got time to go get lunch and come back, because it's looking crazy. And so I made a point not to trade on my phone or anything while I'm at lunch or while I'm going to pick my son up anymore. I don't even know why I got into that. I was never comfortable doing it before. I don't know why all of a sudden I was. So, but this is one of the times where I should have been watching it so I could take it off. But it made this big move, and when I got back, we were on this candle here. So we came up, it held a 9, it pulled back. I'm waiting for it to get to 80. It never did. And it went back up to the 20. We traded sideways. This is a bullish pattern. And then I ended up, taking it off on a profit stop because we had some news come out about this. It was positive. So I thought I figured this wasn't going to come back. I thought it may even pop the VWAP, but, I was done with it after that. So looking at how I managed it, I'm going to go back. My feelings during this trade, it was taking a long time. I felt, points of impatience. I finally got frustrated and ended up going to lunch, and it made that move. I didn't have an order out, which I should have, but I didn't. But that's what happened. Those were the feelings that I felt during the trade. So what was good about the trade? My execution was good. My entry was good. My the way I managed the trade with the first 2 covers was good. The results were good. But the bad thing is I let greed creep in and I didn't take it off when I should have. When it dipped down again, when it started to come back up, I really should have taken it off. And I'd have been 10 cents away from my target, but that would have been great. That would have been a win. So, one of the bad things about it was the way I managed the last piece. Does a trade make sense to you now that it's over? Yeah. This was a sensible trade. We took it off the VWAP. On the rejection of the VWAP here. And, the technicals kept me in the trade. I stuck to my trade plan until the last piece. But the trade did make sense. It did make sense. Oh, I'm going too far here. Yeah, so this was the one we saw this made 164.79 on. Not a bad deal. This was the good trade here. So let's go back to. So yeah, the trade did make sense. It was a solid trade plan. I executed it, 75% perfect. All right, so what's the final judgment on the trade? The conclusion was, I did a good job. These two can be put together because a lot of times I'm saying the same thing. For this. The final judgment of the trade, you know what? I didn't change this. The action plan is what I'm gonna do to fix it. What did I do that was good? What did I do that was bad? What am I gonna continue to do to help make the trade right? So I need to change that back. So my final judgment of the trade was that for 3/4 of the trade, I executed flawlessly. It was the last part, and it was probably because it was taking so long. It was going into lunch. my mental energy was pretty much spent. And, because I'd had 2 stop outs prior, and, thinking about those big trades that we missed, it was just frustrating. So took a lot of mental energy, but I still feel good. It was still a decent trade. Did everything according to plan. And even stopping out when I heard the news, taking that profit where it was, that was on point. So maybe I can say 80% of the trade I did good. So 80 is a B minus. So that would be the grade I give myself on it. Even though we made money, that would be the grade. And so the last trade I took was this WBA. And so I'm not going to take you through the whole process, again, because I think by now you pretty much have it. You understand, my thought process. And what you can do is take this and make it your own. You can use it the way I have it, or you can make it your own. This is the exact same way I analyzed my lessons. Anything I did in education, anything I did in engineering, this is what I did to analyze myself, because I will be the best critic, because I'm the one that knows what I'm thinking. So, this is exactly, I didn't make hardly any adjustments other than add trading to it. And that was pretty much it. So on WBA, I was looking for the same rejection here. My trade plan was a rejection. My stop was supposed to be, should have been red to green here. This red to green line. But, it just took me out because it was just too far away. I used 100 shares. I probably could have used less and give it more stop, but probably should have stopped out here. But I was giving it, some room to work. It went up, and it couldn't push over it. We started to sell back off. I thought we were going to come back down. This candle, we started this choppiness, so it eventually hit my my max loss stop. It popped up here, but it missed me. And then, once it got up here, it took me out. But nothing I see I did wrong on this trade. Nothing I would have done differently. Because I waited for a clear rejection. And I kind of stuck to the technicals. I knew the 9 was too close for it to be a viable stop. So I used this to allow the trade to work. But it just didn't. I mean, the 20 was coming down. I thought it was going to continue coming down and give me, some resistance and throw this back down, but it never did. So 42, 46 on this one. I could have given it more room, but it still wouldn't have made any difference. I wouldn't have on this trade, because if we got up over this, the trade was dead. So trying to give it, $1 just wouldn't make sense. So I feel this is one of these trades where I got stopped out, but as far as I'm concerned, my assessment is I was on point. I did exactly what I had planned to do. Exactly what I planned to do. And all the decisions were on point. So that's how I use my reflection sheets on my journal. They go in. I have a binder, a 3-ring binder. And as I print these out, don't print the whole sheet. I make these charts white, the white background, and I can print it out, so that it's white. Or I can take these charts and put them, I've been known to put, 4 on one page. So I only have to print one time. It doesn't use up so much ink. But like I said, next week, I'll have down how I'm going to track my actual data and get my numbers down. If it's a spreadsheet, then I'll share that with you. I'm still looking at Trader View or Trading View. I can't remember what it is. I'm still looking at it. And I'm still contemplating just physically typing in my trades in Profitly. But from what I can see, TradingView has better charts and better data, so that might be where I end up going. Okay, do you revise your journal often, or do you write and never revise it? No, I don't. Once I write down a trade, my reflection and all of that stuff, once I'm done for that day, I'm done. I'm not going to go back 2 weeks from now and, do something different. I'm just going to, iBoss has that, but I don't really like what iBoss does. What I want to do is be able to give my win-loss ratio based on long, shorts, stuff like that. Kind of what I was looking at before. My average winning trade, average losing trade. Just to gives me an idea of skill wise how I'm performing. If certain numbers start to fall off, then that tells me I'm starting to get slack in certain areas. So I have to kind of develop my skill. Yeah, if I decide to make one, I will. For me, reinventing the wheel doesn't make sense. So if TradingView has it and I don't have to do all this extra work, I can use that time doing something else, then I'm going to do that. But I'll definitely, that's definitely what we're going to talk about next week, because that's the next piece that goes into your journal. Now, and really the ideal thing is to keep this thing electronic. And so what I've been thinking about for months is just scanning it. Once I write it, scan it, and then just keep an electronic folder, so I don't have to print the charts and all that stuff. But no matter what, I gotta write it. I have to write it. All right, so do you guys have any questions? Any questions, comments, or concerns? You said edge work? All right, I'll take a look at it. Let me write that down. Oh yeah, that trading in the zone book. I'm glad you like it. Edge wonk. Okay. EDGEWONK. Okay. Yeah, so really it doesn't matter um, how you do it, or you just want to make sure you're able to hit all of the points on your trade, and that you can give a full and honest assessment of it. And then from there, you get better. You start seeing things that you do, and you get a little bit better. Because now, I know why. I know why now I took the trade when I took it. This morning. I was trying to, why would I take it there? Why didn't I wait? But it was all because yesterday, everything worked out great. And honestly, if I had picked any other stock, it would have worked out beautifully. It's just that this one, pulled back. And that was that. Yeah, your profit targets. For me, first I'm going to look for levels of support or resistance. And if I don't see any, then I'm going to pick. You're going to see me use the psychological ones: $quarter marks, $half marks. And you just trust the technicals on your chart. Whatever you're basing that trade off of, you trust that. If you lose that technical level, then the trade's dead. But as long as it's in play and you don't lose that level, you don't take it off. You let the trade work. And that's exactly what we did on this one. Where is it? Right here. I trusted the technicals. I didn't give up on it. When we started to just dip above things and start trading sideways, I stuck with the plan. And then scaling out, once you lock in profit, theoretically you can hold all day. As long as the trade stays viable, you can hold it all day. So most of the impatience you see me have is going to come between entry and the first target. Once I get entry, once I take profit on the first target, I set my stop at break even, and I'm just gonna let it work. Put my other target in. If it hits it, when it hits it, bam, reset my stop, and just keep going. All right, so I'm gonna stop the recording now so it doesn't get too much longer. But you can still ask any questions that you may have.